Good morning, traders and investors. Let's dive right into the #1 morning show to get you guys ready for your pre-market trading. Let's go ahead. Let's dive into today's topics. We're going to talk about China retaliation, solar stock up on climate bill. We'll, of course, be watching the jobs report and what will happen there. Amazon hitting some breaking news just now, and I'm catching that right as it hits the tape. Tesla shareholders approved the 3-for-1 stock split. We'll talk about some of the things mentioned in that Tesla meeting. Earnings today: Block, Twilio, AMC, WB, Lyft, Fubo. We got a lot to talk about. We'll get into all that. And of course, we got our special guest, Russell Rhoads, head of research at EQDerivatives. Let's dive into today's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Orkin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders. Let's bring on the guys, Joel Orkin, Dennis Dick. Let's take a look at the overnight action and dive right into the markets.
All right, up 5 handles, 57 and a quarter, just kind of bouncing around this 20-point range, 66 and a quarter high, 46 and a quarter low. The question is do we end the week on the highs like we did last week? 73 and a quarter. That's your high from Wednesday. Crude now got an 8 handle on it, 88.27, down 27 cents. Gold holding above 1800 for now, down 215, 1804.40. Silver above 20, but not making a new high of the move like gold did yesterday. Silver down 4 cents at 20.08. Bitcoin waking up, 23.5. That's up a G. And there you have Ethereum moving the same way, more on a percentage basis. That's up $135. That's 8.5%. That's at 17.25.50. So Triple D, we have a stock getting taken over, so that's good news, right?
Look at me and you, Joel. We actually both own this. So what's the odds on that thing? iRobot. I've had this thing in the portfolio for a long time. This has been an absolute dog. Bow, wow, wow. Boom, we're back. Look at that, a break. What's the news, Mitch?
Amazon and iRobot signed an agreement for Amazon to acquire iRobot. This will be for $61 per share in an all-cash transaction valued at approximately $1.7 billion.
Nice. We're not
including iRobot's net
debt. We're getting paid US dollars here, Joel. $61. I like it. I'm
better
back.
than euros right now.
Yeah. This thing's been flying for a couple days, man. Who had the memo on this one? I wish I would have had the memo on this thing. Holy mackerel. But anyways, it's halted right now. 61 in cash, so you'd expect it to trade up to at least 59, maybe even 60. These cash deals seem to get up the price. Obviously, I can't see any reason why this deal probably doesn't go through. It's a pretty small deal for Amazon dropping the bucket. So unlike Amazon, though, when's the last time they bought? They never buy.
I just was gonna say
never buy anything. This is not Amazon-like. Maybe if Bezos isn't there now, maybe they're all of a sudden going to start doing a different style of investing here and doing a little M&A action.
They might have a little insight into iRobot's business, right? I mean, a lot of people are probably buying those iRobots from Amazon, so they were like, you know what? Might as well take it, right?
I've always just liked the concept, and what I really liked about it was the lawnmower that was supposed to come out, but then I don't know if they even ever really launched that, but the little thing that goes around, what they call the Roomba.
I got it. We got it. I
know, it's
gotta have
cool.
a Roomba.
I always thought it was cool, and I always thought the valuation wasn't that crazy on this thing, but it's just had no interest whatsoever. The Reddit crowd, obviously, it was a lot of fun last year when the Reddit crowd grabbed a hold of this thing and went from, I don't know, $82 to $197. So, well, you're not getting that, but you're getting 61. I'm happy. I'm a happy seller.
So it looks like Amazon also believes in the bots, baby. It's all about the bots
are back. Is there any
I was trying to take a sympathy play.
Not
I mean,
really.
also,
Who else
this
makes
is
a Roomba?
I mean, this is a drop in the bucket for Amazon.
Oh yeah,
I
it
mean,
won't
they
even
just
move
have
the
to
needle on them.
take the money out of the till from yesterday's revenue to
Yeah.
buy it. So it's good.
Take the money out of the till from yesterday. Probably, you're exactly right. we'll use 1 days of revenue to acquire
Like, okay,
iRobot.
all right, no, that's good. I'm looking for sympathy plays.
I
Thinking of
see
sympathy.
bots just started grabbing a bit. I don't even know if bots owns it. Does bots? Let's go look at the
That's the only
BOTZ
thing you could
holdings.
be.
BOTZ holdings. Chat, help us out with sympathy. Anybody else making like a Roomba thing? I'm looking at the bots holdings,
And
jumping in. I want to
I don't
see
know
if
who
they have.
owns Shark, but maybe whoever owns Shark. But
We're looking here. Top holdings.
I think there's a lot of
Man, it's
private
not one of the
companies that
top
compete.
holdings. So the biggest in the bots, the biggest holdings always been ISRG. Nvidia is like number 2 basically. UiPath. I'm trying to see if it's even in there. Oh, it is in there. It's only 0.61% of it though, 0.61, which is nothingness. So I mean, somebody's excited and they're like, think right away, oh, we'll go buy bots, but really, I don't know. It's not very much of it. You'd think it would have been more of it in the BOT Zebra. So
All
not too
right,
many ETFs own an iRobot.
Let's get into the macro right quick, and then we'll get into a little bit more micro outlook. China retaliation coming into play here. Friday, they said that they'd halt cooperation with the United States on areas including military relations, climate change, as, of course, Beijing reacts to Pelosi Taiwan's visit. And also went the personal route against Pelosi, announcing sanctions on the speaker and her immediate family. Of course, Beijing has done a lot of military drills. It's been the second day surrounding the island on Friday morning, apparently sending dozens of military vessels and hundreds of aircraft across the median line.
This is not the retaliation. This is the start of a retaliation. This is not like, okay, they were one and done, and maybe the market's like, oh, this is no big deal. Let's take this in stride and we'll rally on it. But I think this is just the start of a long fought political war between the U.S. and China, which is still why I'm scared of stocks. But obviously, the market doesn't seem to be as scared because they continue to buy stocks. So I'm early on this one. Obviously, early on this one. The S&Ps aren't really up that much since I started getting bearish. It seems like we're up a long ways, but really the SPY has just been kind of meandering here, really, Joel, for the last 5 days, just kind of hanging out. It wants to go to the 420. I still think it can go to the 420. But it's just been hanging out. And even when we get that big rally and, a lot of, Kathy names yesterday, the value names get hit. So, I mean, it's not like a buy everything market. It's still very, to the tune of oil getting hit, oil stocks getting hammered again yesterday. Again, I still believe the market going up more so because oil is down. The days that oil is down, the S&P and obviously the growth stocks, the tech stocks really go.
That didn't work. I mean, oil got killed yesterday, and the S&Ps didn't rally.
Yeah, but your problem is you're looking at the S&P. Look at what ARK did yesterday. Look at what a lot of stocks. There was a lot of stocks that were up significantly yesterday, so it did work again yesterday. The growth tech play. So what is being bought is when oil is down, and we said this too. It's growth tech getting bought. And, at one point in time, ARKK was up substantially again. So it's been a pretty good move here. I think you still should ring the register, but I don't know. It's not starting to break out ARKK. So obviously, I've said that I believe the 2022 low is in. I'm just nervous about the whole China thing, but maybe I shouldn't be nervous. Maybe I should just, stay long stocks and get more long and just go with the party. I don't know. Tough market to call.
I don't know if you saw the sun out today, but the solar stocks definitely saw the sun. Solar up on the climate bill here.
Yeah.
A lot of stocks moving there. The Senate will take up the Democrats' tax, climate, and health bill on Saturday. Schumer says that the Democrats are trying to pass the bill under a budget process called reconciliation, which would allow the Democrats to pass the legislation without the threat of the Republican filibuster.
So they already rallied on this bill,
know.
and now they're rallying on it again. And I mean, they're big
Sun
time
comes up,
rallying
baby.
this morning. There is stocks. ENPH trading up another $6. You cannot stop this stock, making new all-time highs SEDG, dip getting bought, obviously dipped off the earnings, just a buying opportunity. Started getting bought yesterday, continuing to get bought today. First Solar and Monster mode here. It's gapping up here again. And then you can go into the little ones like SunPower and stuff. And these things are all just on fire. And the catalyst, obviously, this bell, but they already had the gap up a week and a half ago from this. Now they're going up on it again. Can't stop this bull train here, at least in solar.
Yeah. Nice little gap fill in SEDG. I remember we were talking about this when it was trading down in the pre-market, and I should have put the date in, and I'm like, I think it's going to find a home, between 300 and 330. Didn't know the exact path. Nice double bottom under 300, trading up 10,000 shares. I'll give you a target on this one. Ooh, let's see here. A lot of people, I'm sure, would like to see it get back to the 2-day high at 329. Even now, first things first. Let's take care of 319.40. You haven't hit that yet. And for this, is it supposed to be announced today, or is it something Saturday?
Yes, Saturday.
So you won't know what the
it's getting passed.
But it's getting passed.
No, it's getting passed, but you kind of like to be, your finger on the, like when it hits the tape, like
it already, it's priced.
I feel like it's already priced in too.
I feel like
this could be a pullback now.
Yeah. I'm with Mitch here. I think they're gonna gap them up here this morning, and then there's gonna be a rug pull here eventually. If you're trying to come in these things now, I mean, SunPower, SPWR from 16 to basically $24 in 1, 2, 3, 4, 5, 6 sessions. Stock just went up 50%. The stock that has been in the gutter, up 50% in literally a week. I mean, what do you want? This is a bear market. You got to take that money. It's like the Square. I looked at my Square yesterday, and I'm like, I'm up 38% on Square, and I've had it in my portfolio for 9 trading sessions. I'm like, or maybe it was 12 trading sessions, literally 2 weeks, maybe 2.5 weeks. I'm like, you're in a bear market. You're getting 40% moves in 2 weeks. You take the money and run. I sold my Square into the print before the print. I didn't want to take it through. I sold it at 89.5, closed 89.70. It's down 84. Am I going to regret it? Probably, because it's probably going to just, buy the dip will come in, 84, hang out here for a day, and then all of a sudden it'll be back up at 100. Be like, why didn't I rebuy it? But
then rebuy it. Then decide right now when you're going to rebuy it.
I should rebuy it right now and just scalp the $5. But I told you, I'm nervous about what's going to happen.
Okay.
Here. So I've been raising.
What if it came down into the low 7, like 73?
Yeah, I think so. I think so.
Yeah.
But it isn't going to do that. AMD, it stays down there for a day. Right now, it's rah, bull. Until China really pulls the rug, and today's news isn't a rug pull, until China really pulls the rug or there's another catalyst that we don't foresee, this market wants to go higher. Money managers are scrambling. People were too bearish. I mean, I wish I would have just stuck with my full bull thesis from 3 weeks ago, but it was a good move. I mean, it's hard to just, when the markets go up 9%, and you got individual stocks, like I talk about, those purchases, and I was texting my buddy Mike, and I was looking at that old text. He's like, man, I should have just bought those stocks. I said on the show, I bought AMD, 76 that one day. I bought MRVL 41, which was lucky to almost get that exact low. I bought the Square at 63, and I bought more IWM. I don't know why I paid that, but it was probably like 170 and change. And then there was another one in there too. Do you remember? Anyways, I've sold. So I sold my Marvell. I sold my Square. I sold the part of the AMD. I still have a piece of it. And I'm like, these moves are big. These are big moves. 25, 30% moves on some of those stocks, especially Marvell as well. You're talking like a 40% move in a month. That's big money. That's big moves. You got to take those profits. This is the kind of market where if you don't take the profits, you look back at it and there's a rug pull and you're like, why didn't I take those profits? So maybe we're going to go rah V bottom. I don't think so though. So that's why I'm just booking the gains. Not going short, but booking the gains.
Can't blame you there. Let me give the numbers here. At least might as well. You already talked about block. Let's just give the numbers right quick. EPS coming in here at 18 cents, beating the 17-cent estimate. Sales were at 4.4 billion, beating the 4.35 billion estimate. Block updated investors on its operating expense guidance, pretty much lowering that. The Block CFO said that we're reducing our planned investments for the full year of 2022 by $250 million as we enter a period of potential uncertainty.
I just gave my analysis. It's going to pull
Yeah.
back. It's probably going to be higher in a week unless we get a major rug pull from something, which there still is that possibility.
I mean, okay, so you've taken out the low from yesterday, right? No, I think you have. Yeah, no big deal. So, I'd give this very minor resistance if it starts to rally 86.73. That would fill the gap. Really, the only thing you can look at, and this is far ahead of the 50% retracement, Dennis. I think if you get it like in the lower 80s today, 80.70 is your 2-day low, but it looks like you already got someone bid here. It already looks like there's buying interest at 83.5, 84. So if that holds off the hop, then you could see the previous day's low and then work your way higher. But there's nothing in there besides your 2-day low.
What's that 50% retracement? You just
73.
73.
Yeah, you're not going to. Yeah, I don't think.
In there. I'd buy
unless
it.
we get, and it's my turn to say it. Unless we get the China rug pull, I don't think you're going to see 73.
Maybe the China rug pull isn't going to be as bad of a rug pull as we thought. So.
But what would it be? Maybe like a little mat pull instead of like a full rug pull?
Wow, they haven't really done anything yet, so it's hard to say.
Sometimes you gotta take out the mats and beat it, right?
chain. I think they're going to screw up our supply chain, but again, maybe I'm thinking too much. Maybe I should just not think and just buy, because that's what this market is doing. This market doesn't like to think, it just buys. We know there's a CPI number coming that's going to be light. Like I'm just got that,
My thoughts
the
are
ratings
also
on the wall.
My thoughts also there, Dennis, is that is the writing such on the wall that it's already kind of getting priced in?
That's why people are buying stocks.
That's what I would
They're
think
buying
too,
because they know the CPI light number is coming. But this market is stupid and prices nothing in. So we're going to see the CPI light and they'll probably rip it higher here again. Hell, who knows? Maybe Craig Johnson's going to be right. We're going to hit all-time highs. I mean, it's unbelievable the move we've had. But if you've been sitting here and you've been getting crushed, I mean, what an opportunity to lighten up stocks. This is your opportunity here. I mean, they're giving you opportunities in so many stocks. And let's go to AMC. I mean, it's been a fantastic run for this stock, too. It hit my $10 price target back in May. I gave that price target when the stock was $50. It hit the $10. I should have bought it at 10, I guess, though, because the thing got to almost $20 yesterday. Mitch, tell us about these earnings, and I guess they're getting some preferred AMC unit or something, some type of financial engineering there. Talk to me about it.
All right. Let's go ape crazy here. I was going to save it for later, but let's get into AMC Entertainment Holdings adjusted EPS at 20-cent loss, missing the 19-cent loss estimate. Sales at $1.17 billion, beating the $1.16 billion estimate. AMC plans to issue a dividend here to shareholders in the form of preferred shares listed on the New York Stock Exchange under ticker none other than APE. AMC CEO board has authorized establishing a $100 million fund for investments there, and it's going to be interesting. Now, they're pretty much were saying that this gives us an ability to have more M&A and do kind of some purchases out there, acquisitions. We'll see what happens. Really, it was kind of interesting earnings call to say the least.
The stock is just an interesting stock, and I'd love to talk about it more, but when I say something negative, I get 100 messages at me that hate me. So that's why I just try not to talk about it. It's pulling back here. There's probably going to be buy the dip mentality here too. I mean, valuation has never made sense on this. It doesn't trade on valuation, trades on hope, and trades on just story. And I don't know, this story, which they thought was hot last night, they did the rug pull on this thing though. I mean, this kissed almost $20. Now it's 16.5. I think you can find support in the 15 handle, but who knows? They're buying dips on everything, so maybe they come in before that.
Yeah, this seems to me like the final.
Weird. Oh, go ahead, Mitch.
This seems to me like the final push here from Adam, the CEO, just trying his best to rally up the apes one more time. So,
did he have pants on in this interview?
At least. Now, there was a lot of whispering going on in the earnings call. I don't know if you guys caught it. Every now and then you were like, And I'm like, yo, what is the whispering in the back? And why is it getting
You listen to
picked
that
up?
call, the AMC earnings call?
AMC earnings
Yeah,
call.
we had it on Benzinga, and a lot of people did listen to it.
They like that one, man. You know what? He's interesting. He's an interesting.
It's fun to
fellow.
listen to, at least. I'll tell you that.
Hope the camera drop, and he's now wearing pants again. This guy, very interesting person.
Yeah, he mentioned The Rock like 3 or 4 times.
I think he's a nice guy.
So maybe he likes Dwayne Johnson.
Guy.
I can't blame him. Let's get out of AMC.
I
Let's
just want to give the apes a little bit of something.
Some levels. Give them some level.
This is what the apes need to do. They need to defend this 17 here. They, you had that move 14 almost to 20. I'll use that. Here's a pullback at 17. You got a low at 1678. Just kind of lurking around here. So the
lurking.
If the apes can get a 17 bid together, boom, why not see that close at 1821? It's not the kind of layup that we gave you yesterday with Lucid because you had 6 daily lows in the same area. But, it's just that there's a level there. You have 1 daily low there. That's surely not, what a Lucid like. But let's see. Battleground at 17. Apes. We'll see what they can do with it.
All right.
We'll see what those preferred shares do for the company. Let's move on. Let's go towards the next, I would say, favorite stock out there. Let's get back into Tesla. Tesla was an interesting stock. Of course, they approved this, the 3-for-1 stock split. This is going to be interesting. Of course, Tesla said this will increase the company's outstanding shares to 4 billion and expected to make the stock more affordable for investors. Tesla's stock split in 2020 was a 5-for-1, and this one a 3-for-1. Musk also said that it expects Tesla to ultimately have 10 to 12 gigafactories and also end the year 2 million annual production run rate. One of the interesting comments that I thought was really something that caught my eyes was when Elon Musk said that they have good cash flow before autonomous driving. He said, this is really before autonomy really kicks in. We have autonomy to some degree, but solving autonomy would really be an amplification of free cash flow. You run the numbers and you're like, wow, could it really be that crazy? But yes, it could be that crazy. So this year, I swear. Those were words from Elon Musk. So looks like he's expecting to have the FST done by the end of this year, at least from what he said.
I was up on this last night. It ran up $5-6 initially on. Actually, might have ran up more than that, Joel, from looking at that chart last night.
Uh-huh.
So gapped up, and then they pulled the rug out. I mean, was a sell the news event. So if you think it's going to get the huge rally from it, I don't think so. I think it's already had the huge rally into all this. I mean, Tesla's been running here for a week and a half as well. So maybe it continues. This run seems to want to continue here, but I feel like the easy money has been made in Tesla.
You can't really say it's giving you any signs of giving in, right? It still looks like the path of least resistance is higher. Small candle yesterday, so that buyers and sellers are coming to a little bit more of agreement here. Always first things first. That will be market dependent. Can we take out that high from yesterday at 940.82? And then I'm just looking, 950 is just kind of sticking out to me. One high just under it, one high just over it, actually at 45 and 55. So, potential resistance there. I don't think you can get worried about a big decline or a pullback. 915 would be kind of close. That would be the low from yesterday. Maybe under 900. Say, come and get me. Go back under 900. Maybe we're going to get back some of this move. As far as the 3-for-1 stock split, I mean, lipstick on a pig. I mean, it just. I'm not calling Tesla a pig, but I'm just saying.
Oh, you're getting some hate mail now.
Oh, I did.
Get ready for the Tesla haters.
You said it.
You said it. That'll be in the news.
It's not
a single printed article on there. Joel Orkin calls Tesla a pig, and you'll have 1,000 emails.
Hey, but it looks like it's going to be a self-driving pig, so don't worry about that. We'll take a look at what happens really with Tesla going into that. I think a full FST, if it could really just drive itself, is going to kick it out the waters. I'll just say that right off the back. That's what I've been
They're
looking
so
for.
far away from that.
Yeah, there's no
They're
infrastructure.
so far away from
Well,
full
full self-driving. That's what we're. I mean, that doesn't need infrastructure. That just needs connectivity.
It's just so far away from that. I think we're a decade away from that. I'd love to think
Dennis?
a decade.
I would say way off. I would say maybe 2 to 3 years.
I think we're still a long ways from
We'll
full
see.
self-driving.
We'll see who's right? I mean, still 2 to 3 years. We're gonna have to wait a little bit.
I think it's gonna be awesome when they have it. And I love Musk, and I think Tesla can lead this. It's a reason to own Tesla.
I mean, there's some robo taxis already, right? I mean, it's not like it hasn't been done, but it hasn't been perfected. That's what we're trying to find out, and it needs to be perfected.
Who was it? I believe it was Musk that said the 99% is easy. It's capturing that last 1%. That's the difficult part. And what that means is the sudden move, the dog runs in front of the road, or the kid, is not paying attention, walks in front of the road. Can the car, and there's all kinds of other aspects too, but I mean, it can hold it between the lines. I mean, it can do a lot of things. It's cool, but I think we're a ways away from being able to react like a human being.
We'll see what happens there. Let's go to Twilio now with their earnings. Let's get out of Tesla. Twilio EPS coming in
Do
here.
this one quick.
I got to go wide here too. I'm gonna go wide.
Yeah, it's almost 8:30. Let's not do Twilio. Let's get ready for the jobs number here.
Yeah, preview the jobs number. I'm gonna sneak away in the background here. I'm going wide because I don't really feel like getting picked off today.
Yeah, I don't think anybody does.
You feel like getting picked.
Nobody ever feels like getting picked off.
Jobs report for July estimated at 258,000. Prior was 372,000 jobs added. We're going to see what happens here. React, of course, we'll keep it low on that algorithm jump, because a lot of times we get some quick jumping. Who's jumping the tape today? I'm pretty sure they're already getting excited there.
There's just I don't know. Is it going to be like, well, if it's a weak number, well, that's good, right? Because then the Fed's going to have to stop raising interest rates. And if it's a bad number, well,
but will they really?
I mean, if it's a good number, it's good because the economy is still rolling besides this. If it's a bad number, interest rates are coming down. So it kind of looks like a win-win scenario in this market, but we shall see what happens. You know where the levels are. You know what we need to do to get this rally another leg higher. That comes in at 4173.25. Can't give you a major support level. I could give you a minor support level. That would be down at yesterday's low at 37. So that's what I'm gonna do. I'm gonna trim the edges there, see which way they decide to go. We have no algo jumpers out. Jobs report imminent. And here we go. We're gonna have it. And the first move is down.
Yeah, they opened the spread massively there.
They opened it way down.
There you go. Now it's ticking down there. 413. Man, that was a quick.
Yesterday's low 37. We just hit 38. Bad. Either someone jumped the gun or it's a bad. What do we got?
Unemployment for July at 3.5% versus 3.6% expected. I'm looking for the kind of the thousands job numbers right here. Just give me 1 second on that. At least the rate coming in at 3.5 versus 3.6 expected.
Okay.
Here it is, 528,000 versus 250,000 estimated. So big non-farm payroll coming in here. I'll get you guys the numbers right on the screen in 2 seconds here.
Wow.
Big number coming in here.
Yeah, they weren't expecting
that.
Prior
was 372,000. The estimate was 250. It came in at 528,000. So definitely getting that to... you see the shakeup there, guys. Down there towards 411 now. And it's going to be interesting. I'm sure this is shaking up some of the stocks out there. And really quickly, we reject that 415 level that I was looking at. And we might be... Can we get to 408 today? I was looking for us to get back into the range. This is the big thing for me, is if we stay inside a range here, sideways, it's actually not the worst thing for the bulls, but I think everyone was looking to get towards that 420. Now you're starting to see a little bit of a turnaround.
Yeah, they just I guess the the dovishness of the Fed, they're going to say no way that everything they've done. This economy is still ripping. We're still going to have inflation. I mean, that's not what the commodities are indicating, but right now, the dovishness is going to be off the table here based on that. Average hourly earnings up 0.5%. So here we go. You didn't need China for the rug pull, right? You just get it within our own data. That's been one of the biggest moves off the jobs number we've seen in quite some time. Had the head fake up. I don't know who bought it on that, but you got the head fake up, and then they just absolutely are slamming this. They're thinking that the Fed is still way behind, and we're going to go from what was turning to be a little bit dovish to completely hawkish. So the battle for inflation. Yeah, I mean,
now
this
the
is
question will be probably put out there: will it be a 50 basis points? Will it be 75? And this leaves room, right, for the 75. I think the 50 was more of the outlook. I'm going to take a look at the CME Fed tool in a second here, but definitely something to keep on eye is now will we get more of a hawkish Fed to come out today? Look out for also some more Fed talk after this number, right? Somebody can be speaking in probably the next hour or two is something that I'd be watching for to see if we get some continued downside. But looks like we're leaking.
Oh yeah, I mean we are well below the that low from yesterday. We have to use that as potential resistance now. Uh, if this is if it's super bad, the low for the week is 40, 80, 50. Actually, you have a couple lows in that area. 40, 80, 50 was Tuesday's low. That is actually was buffeted by a low from last week at 40.81, and Wednesday's low is right in that area too. So that's where the bear. I mean, this is a decline. They whooped it. They took it off the high of the move. But I think for bears to assert their control today, and maybe it won't be today, but early next week, is you just got to take out these lows right here. I mean, it's definitely a kick in the chops. But I was hanging on that number earlier in the week, and I'll stick with it for now.
All right, so it's going to be interesting. We'll keep watching the tape to see how that reacts and how other stocks move off of that.
Yeah, let's take a look at some stocks here.
Banks. I also saw an Apple headline. Check for a quick second how Apple's moving for me, right quick.
Okay.
I did see some Taiwan mentioned out there that they're tracking their shipments now. So there's something hit the tape right there about Apple warning suppliers that China is now strictly enforcing a rule labeling Taiwanese shipments. It's getting hit a little bit there. Now let's take a look at the banks. Let's take a look how they're reacting.
I would just say for China, I mean, that's great timing to come out with something like that. I mean, they're technical analysts and their politicians couldn't have planned that better. To bring that news out when the S&Ps is basically in a free fall. I mean, impeccable timing on them. Apple is in retreat mode here. 164.43, you need to get above that, right? That was the low from yesterday. Your next daily low comes in at 160.75. That's still over $2 away. So they're definitely putting some damage in this market. I don't know if the stocks are reacting as much as the S&Ps. We'll get that from Dennis when he comes back on. Banks really not making a move here. They really haven't been reacting to higher interest rates. I don't think this is good for Kathy. Right? ARC.
ARC was
that's
right
down
at the top there.
Yep. It just puts the whole, the whole Fed interest rate scenario, right back to where we were before. And that is the threat of higher inflation. Now, we're probably not going to have any data or anything until the CPI comes. Do you have that when the CPI comes out this month? I know we keep asking you that. I'm just going to write it down.
10th. Wednesday the 10th. Next week, Wednesday. And it's interesting to kind of note it kind of falls right in line with that last range that we had in the SPY where it was about 8 days of consolidation and then we tick down. We're about I think we're on the 5th or 6th day. And now it's going to be interesting to watch if right around that CPI, we come right back down. And that's going to be interesting. Of course, everyone's expecting CPI to come down. And so we're wondering if that's been priced in. Solar already starting to give up some of that gain. And so keep your eyes on those solar stocks. I have a feeling that they might flip today. But like always, make your own investment decisions. Let's go ahead. Let's get into our interview today, right? Let's dive on in. Let's bring on our interview here. Dennis will be joining us in a few seconds. Let's go to Russell Rhoads, Head of Research at EQDerivatives. Welcome on, Russell.
Hey, great to be here. The last time I was on with you guys, you were radio only.
Yeah.
I was like, oh yeah, I gotta go take a shower. So, and for full disclosure, I'm wearing pants. I've been listening this morning.
Full disclosure, you guys got it, pants baby.
So thrilled to be here. Needless to say.
All right, Russell, thanks for joining us. It's been quite some time. I hear your name from Stocks and Jocks. I know you go on there with those guys, and that's always fun. The first question I have for you before we get to the markets is I was looking at your background, and you were at Millennium.
I was. I was at Millennium. I was working with a group that only invested, that we only did real estate. And
really?
Yeah. And we were early. You're taking me down a completely different path, but this is it's kind of a fun story. We went into 2007, very short real estate. And Millennium pulled the plug on us in March. We were down 30% for the year. They pulled the plug on us in March. It was the first day of the NCAAs because we got the plug pulled on us that Thursday morning, boozed it up, watched the first round games, then went home and told my pregnant wife what had happened. So it's a great story about being right, but
being
not
wrong.
Having the timing right. The fun part is they held on to all of our positions and they did quite well with them.
Oh, I'm sure they did.
Yeah.
So they pulled the plug on you.
There were follow-up discussions about that. Like, hey, come on, guys.
Was it Jim Simons that pulled the plug on it, or was it?
I'm not 100% sure.
Okay.
Made the
all right. I'm
call,
sorry. Sorry for the.
I wasn't the one that got the call. I just heard. I heard the call going on, and it was like, okay. Hey, Russell, don't trade anything.
Okay. All right. Well, Russell, this options world can be, very complicated, right? Mm-hmm. And there's a lot of people out there that make it very simple, right? There's different ways to approach it, but what it comes down to is knowing the VIX, right? And knowing how the VIX is going to respond at different times. And you have a theory about the S&P cash expiration and how the VIX doesn't always react the way it should, at least this year. Could you set that up for us and then give us ways that we can look at it and interpret it on our own?
Yeah, absolutely. And the fun part is at the EQD Global Conference in Vegas, we had a little extra time at the end of a panel and I brought it up and everybody looked at me like I had three heads. But basically, now that we've got multiple SPX expirations, and this will go back to once Mondays and Wednesdays were added, you guys just talked about CPI, and CPI is next Wednesday. And if you were going to hedge because you're worried about the next inflation number right after seeing what we just got employment-wise, you take a look at the Wednesday SPX options. Well, that's not going to show up in VIX, because VIX uses Friday options for the expiration, and they use the Friday options just before and just after the 30-day time frame. So my thinking is, now that you can be a lot more strategic in your hedging, that's one of the reasons that we haven't seen VIX react the way that everybody expects it to react. When we fell into a bear market this year, everybody keeps throwing that VIX needs to get up over 40 before we're in the clear thing. And I just don't agree with that. And, of course, I'm coming on saying something bearish about the stock market. And I knew that our reaction would be negative to the employment number, because I was going to sit here and talk about how VIX is kind of giving us an all clear, but also how VIX is not, you shouldn't expect VIX to react in the way that it has in the past. And that's just because the underlying market has changed so much.
Do you expect that to continue?
Oh, I do. It's like I said, you've got this strategic. You can pick your exact tenor these days with respect to SPX options. And what I'm doing, and you can see I'm looking to the left. Right now, the next big number you mentioned, CPI next Wednesday. The SPX at the money options that expire the day before, the implied vol is 15 3/4. The implied vol for the August 10th options that expire, those are the ones that you would use if you're worried about the next inflation number. The implied vol on those is 18.50. There's a 275 difference right there, and it just pops up almost like that Wednesday's going to be an earnings announcement for us now. But again, being able to hedge and be a lot more strategic with your hedging means that the Friday options are you're not your only alternative. So maybe the insurance is getting spread out over a lot of different tenors, and that's smoothing out VIX, and that's just why we did not see the VIX move above 40 as everybody expected with the type of stock market reaction we got. And a lot of folks are saying that we're really not in the clear till we get VIX above 40. And I'm disagreeing with that one big time, although we're getting hit today. But
what would you say to someone that posed the argument that the VIX options or S&P options, trying to hedge these kind of events with options is really putting yourself at a disadvantage? And the reason I say that is you're getting all this volatility right now in the S&Ps, right? And less liquidity, right? Bigger players out there. Well, the futures guys, they got to make moves, right?
yeah.
They got to put hedges on. They're doing things, but the option market makers, can't sit back. They can run their formulas, and they can say, and then they call. And then I've also noticed this with a lot of stocks, like like there's really good news on a stock, and it's just juiced, and you're like, oh man, I want to sell this call right now, like right off the opening print.
Yeah.
And they'll just wait, and they won't open it, and they won't open it, and they won't open the option, and then the stock opens up, and then it drops $2, rallies $1, and then they give you like a spread that you could drive a truck through. So just what do you? I mean, maybe I'm being a little bit over cynical.
Yeah, you're overdoing it on that one, just because there's so many exchanges and so many different there's not as many liquidity providers that we've had in the past. But among the top 100 stocks or so, which are the ones that I tell people, really, I think people should only look at trading options on the top 50 stocks. But that's widened out. It's spread out a bit. The type of market maker stuff that they kind of slowly open things so they didn't get run over. We don't see that nearly as much as we have in the past. So in the thing that that's really come up a lot with the institutions I've talked to this year about hedging with index options, it has not worked. I think the Cboe Put Protect Index, which owns the S&P 500 and buys 5% out of the money SPX puts, I think it's basically down a little bit more than the S&P 500 this year. And that's because a lot of people were nervous coming into 2022, and the options really priced in the possibility of, especially with out of the money puts, priced in the possibility of the market selling off like it has. So I think the option market in general, with more participants, has gotten more efficient with respect to the mind of the market or what the market's expecting. I got a chance to interview Ed Thorpe once, and you try to slip that one question when nobody's listening, and I asked him where he was looking at that moment to make money in the market, trying to get something out of him, and he gave me this evasive, well, I'm always trying to look where everybody else isn't looking. Coming into 2022, everybody was prepared for some sort of a sell-off, and they had bought insurance for the sell-off. So you didn't see the implied volatility of SPX puts go up maybe as much as you thought it should have based on the sell-off. Well, that's because everybody had already bought the insurance before the hurricane came in. So you had to look elsewhere with respect to concerns with if you thought the S&P was going to sell off, you wanted to speculate on it. And I think the futures market was, looking back, was definitely the way to go, especially because you got that one delta exposure. Of course, you got to be very certain that you think the market's going to sell off if you're going to do that, as opposed to hedging with options.
Do you think options ever go 24 hours?
I'm hopeful. My since I saw you guys, and it's been years. One of the things I was hidden away and finishing up a PhD.
Wow.
And my first, and they did not let me do my first proposal, but my first proposal was on why so many listed products don't succeed. And there were certain things that you needed, that there were commonalities among things that did succeed. And one of them was, the legitimate use. And I think there is a legitimate use of options, at least on the really liquid markets, 24/7. I don't see why, the market makers would say, well, I don't have a good market in the underlying stock. We've got 45 minutes till the regular stock market opens. You can't tell me we don't have a good market in Amazon right now that option market makers couldn't key off of. So maybe not 24 hours, but options that open up maybe 90 minutes before the regular stock market time.
All right, and now?
Maybe stay open an hour after when we have earnings as well.
Yeah, that's interesting. Just to get the mark. So what now? We've had a rally, right? Predicated on an a decent earnings season. At least that's the way they reacted things. A jobs number that says, hey, my eyeball test is right. The economy is not slowing down. Is it just average person, or, do you think that they need to hedge in these kind of situations, or not? Just wait.
I think that by the dips. The way that the average person can hedge is
cash.
Yeah, you nailed it. I was going to throw a Buffett analogy in there because he's always got cash on hand and people criticize him for it. But the reason he's got cash on hand, not the guy that I blew up with on real estate, but a different hedge fund, the guy I worked with, always wanted to have a little dry powder to trade opportunistically. And like right now, we're getting a sell-off in what I think is an uptrend, just not being fully invested in having an opportunity to take advantage of the sell-off. For an average investor is the way to go. There are ETFs now that allow you to replicate hedge type strategies, and maybe those option based ETFs at times that you're more concerned about the overall market.
So let me know the next time you blow up a hedge fund, because
no, that's not happening again, man. I'm a professor.
In. Just let me know that, if it comes out. I'm just giving you a hard time.
I know. It's it's far enough in the rear. I mean, this was 2007. It's far enough in and the kid that was on the way is turning 16 this weekend. Wow. And I've recovered enough to go buy her a car.
All right. Okay. Well, that's great, Russell. A top-down look at the options market. Russell Rhoads, head of research at EQDerivatives. I know we used to have you on all the time back in the old days, and we kind of got away from it. But when I heard your name on Stocks and Jocks, I said, hey, Russell was a nice guy, or is a nice guy. So glad, good information. Learn something new every day, and we'll be dialing you up again soon. And you have a little visitor behind you. So
she's...
Don't be surprised.
Yeah, she's. I've been out of town today's my first day back in the office, so she's staying close to make sure I don't leave again.
Okay. Hey, well, the chat loved you, Russell. We'll definitely have you back on. Appreciate you coming on.
Thanks a lot, guys.
Russell.
I appreciate it. You bet.
All right, let's go ahead. Let's keep going with some of the headlines that are on out there. We still got some earnings to take a look at, but let's take a quick look at the overall market. We've been dropping. Dennis is back. Let's take a look.
Rug pull here, and that didn't take China. Just took a jobs number. Wow.
Did you see what China snuck in there, though, Dennis?
At the same time?
Well, yeah. it was a little bit before. It was a little bit before, Joel. It wasn't.
Give Dennis that news.
Slack
Incredible timing.
I've been trying to trade. I haven't been reading
Apple
any news.
Apple news that I thought was important to mention there.
Apple
warned about suppliers that China is now strictly enforcing a rule about labeling Taiwanese shipments. And so I think this is really going to start causing a
There's going to
battle
be
in
a
the
headline from
semiconductor.
China like every day, and they're
Yeah,
going to
every
make
day.
it
They're going to
difficult.
slowly going to make it difficult. I
They
agree.
are. And this is why I'm scared. This is the reason that I'm raising cash. It's not that the jobs, are coming in and obviously making our markets tank, which didn't help here today, but I'm scared of repercussions, slow repercussions of just the slow breakdown in relationships. I mean, you just think about it, and sometimes it's just good to take a step back, and we've already did this, but take a step back and look at the big picture. We get everything from China. All of our stuff, and if somebody will say, "Oh, we don't get this from China, this from China."
But you think we depend on Russia for oil?
Most of our stuff comes from China. It is not a good thing when all of a sudden we're going to go into a political war with them. It is not a good thing. The market oblivious, because the market, people who say, "Oh, the market looks 6 months out," don't know what they're talking about. The market doesn't look 6 minutes out half the time. The market is stupid. It's made up of stupid people. So this is why, as a trader, if you're just thinking a little bit, you can extract alpha. This is why I make money usually every month. And I mean by usually, I mean almost always. This is why, because I'm trying to always think a little bit outside, take the big picture, and try to get an overall view. The market saw COVID coming zero. It was so obvious. I was early again, and that's my problem, is that I'm too early sometimes.
Don't worry, Dennis. I agree with that.
I mean, the market, oh yeah. And then they're trying to say, oh, well, people knew, then insiders and the Congress, knew COVID was going to be bad. We all knew COVID was bad. All it took was to look at the stupid videos coming from China, where what they were doing. I mean, we knew it was coming. The market is stupid. Say that to yourself. The market is dumb. It's made up of dumb money. All these institutional money managers, you're going to hear about the Simmons, and there is some really smart market participants. Don't kid yourself. There's some really smart ones. But 90% of the money that's being run out there is from people who have no idea. And that's why you can extract alpha by reading the news and getting a feel for what is happening overall. We're so connected. So, I mean, you just look at the big picture here and you're like, how in the hell is this not? How in the hell are we just keep ignoring what we just did with China? So anyways, that's a whole different story. But what I'm just trying to say is, don't get in your head that the market is efficient. The efficient market hypothesis, been wrong. There is ways to extract alpha by reading the news. And maybe the way to play it is to wait for the major China headline and then sell. And there's money to be made on just selling these headlines, when they turn. Is today a turning event, because of the jobs? I don't know. But all I know is we've had a hell of a run in the market, and I think it's time to start ringing the register. I'm not selling on the day that we're down, 400 Dow points or 45 points. We just sold 50 points off. So I'm not selling stocks now, but selling yesterday was probably prudent. Selling the day before was probably prudent. Maybe wrong. We can't always be right. We're not going to be right 100% of the time, but if you're right 52% of the time, you can make money. So that's the rant. Let's cover a few stocks from the ticker.
Yeah, just what did you see out there? I mean,
I thought rug pull everything. Just literally
they didn't buy anything. They sold gold. They, like the banks. The banks have not
they hit everything, Joel, on that. The banks didn't get hit too hard on it, so the banks are holding up. But they hit a lot of all the growth tech stuff getting hit here. QQQ getting hammered. Apple getting hammered. They hit a lot. They hit everything they were buying the last 2 weeks.
Dollar jumped also on that.
And again, the dollar is perfectly inversely correlated to the U.S. equity markets right now. So you can be a dollar trader all you want, and you can say, "Oh yeah, the dollar leads." It's tight. Market sells off, dollar goes up. U.S. dollar.
Yeah, no, but it's going to be interesting. Also, I was looking at that silver and gold trade that was coming back yesterday, and I was like, well, just watch the dollar, because if that turns around, maybe that trade is just a one-day kind of trade. And so definitely not silver and gold where I'll be watching today. It's interesting. Even Tesla down big here after some interesting news. You thought this was going to keep Tesla holding on up. It's starting to come on back, and it's affecting all the stocks. We can get into
that gets dragged down with the index.
It does. This is the higher beta. It moves. When I'm hedging it, I do twice as much. So I mean, half as much Tesla to twice as much usually QQQ, because this is the way it moves around. So you just got to know the hedging. So obviously that's moving down here, but we're getting hammered here. So now all of a sudden it's like, oh, what do you mean? The stocks, okay. So I don't think we're going to bounce back here today. I don't think this is a buy the dip opportunity, but maybe I'm wrong because they keep coming in and buy the dip. I think you'll get after the open. I think you'll get that early morning, like, okay, yeah, let's try to buy the dip a little bit. I think the sellers will win on the day, though. Like, I think any rally that's going to come up here now, I think you have sellers from the last 5 days that have been accumulating, thinking we're going to 420. I started thinking we're going to 420. I mean, I've been bearish, and they started to swing me like where I'm thinking, am I wrong? Am I wrong? Am I wrong? So, and I might be wrong, and I might still be wrong, but I think you catch a lot of people here.
You sure are. We're continuing to make new lows on the session here, down 47.5 handles, and there has been no bounce. There really is. They hit it. They saw the hot number, and they just boom. Algos, humans, whatever. Your mom and dad, they're whacking bids. So nothing in there too. I mean, if I told you there was support in here, I'd be lying to you. We have the low so far. The standing low for the week is 40, 80, 50. That's only 24 handles away. We've had less than 100-point range this week, which is very unusual. So you have the setups there. This rebound yesterday's low, which was 36. I don't think you're going to get a chance there. But do you want to cover any more earnings stocks here? What do we got? A couple minutes left.
What a couple tickers from the chat?
Tickers, earnings, whatever.
Give us a couple earnings. Chat. Give us a couple tickers from the chat.
Yeah, we got. I'll let you guys throw it up there. The chat. Warner Brothers, Lyft, Fubo, or DraftKings. Which one's on your mind? I think I know which one they're gonna say. Probably the Donkey Kong, but we'll see where. Oh, Fubo there showing up first. Let's do Fubo right quick. Fubo actually getting a little bit of a spike there, but it's a beaten down name though, definitely. EPS coming in at a loss of 45 cents, beating the loss of 69-cent estimate. Sales at 202 million, missing the 227.8 million. And Fubo did report Q2 2022 subscribers at 347,000.
It's got the pop, subsequent drop here. I mean, it's beaten down. It's been really beaten up. It's a $3 stock, so I think the story here is over. I think if you think you're getting back to 10 or 20 or $30, I think there's almost no chance of that. Could it pop to 4? Could it pop to 5 eventually? It could, but it could also go down to 2 or 1 or pennies. I think eventually it could be in the pennies. Not a fan of Fubo anymore.
Yeah, just make sure. I mean, if you're looking to get out of this on a long, make sure use your pre-market high as a target, and that what comes in at 374. Hit that on a couple 15-minute brackets.
Saw Warner Brothers mentioned there, so let's do that one really quickly. Warner Brothers here coming in at an EPS of a loss of $1.50, down 92 cents year over year. Sales at $9.83 billion, missing the $11.85 billion estimate. So big miss on the sales there. Disclosed total to direct consumer subscriber base of 92.1 million.
Is this WBD?
Mm-hmm.
Yeah.
WBD.
That stock's just been an absolute dog. I mean, this is it. I mean, we're in an overall downtrend. You get the relief rally, and people are like, oh, I'm going to get in now. And then they get hammered again. Stocks that are in overall downtrends, to Brian Shannon, great follow on Twitter. Stocks in overall downtrends, when they start to come back up, are usually selling opportunities. And this is the case here once again. I mean, we rallied $12 to 17.5.
Bulls get optimistic, man. Bulls get optimistic.
40% a month. Take the money and run. Now they just took half your money away. Maybe they're going to take it all. So I'm not interested in WBD.
Trading on the lows of the pre-market session. I mean, trio of lows at 1470, 1480. So if looking at potential support, you can see it took a long time to build that base at 14. So that's just the whole streaming, the whole strategy, basically what I was listening to, they're kind of throwing it out the door once again. So I don't know how many times you could scrap your strategies and go back to the drawing board, but that's what they're trying to do.
All right, can we sneak in DraftKings? I did see someone mention it. Let's go for it. EPS coming in here at a loss of 29 cents, beating the loss of 83-cent estimate. Sales at 466 million, beating the 435.14 million estimate. DraftKings did raise sales guidance from a low end of 2.5 billion to a 2.175 billion. Estimate was at 2.1. So at least they raised it on the high end there to 2.17.
The easy money's been made, DraftKings too. It's had the big move. Mitch, congratulations.
I know. I took the easy money.
That's what you want to do. Take the easy money. Don't go after the hard money. It's a lesson in itself right there. People want to chase things and they're like, oh yeah, now it's going back to $50. It's not. It's not going back to 50. It's not going back to 40. Highly unlikely to go back to 30. I think it could be a rug pull here. I think the earnings were fine, but it was all priced in. So now you get the opening, you get a weak market in it. I'd be careful this thing doesn't go red today.
We'll see what happens.
Are you back in the area of yesterday's high? No. Hold 7. I mean, you're a little ways away from 17, right? So it's a good report. If it comes down 1690, 17, you're right there. Establishes a strong bid. Yeah, I think you got a chance. I don't know. Oh, wow, $19. Who took this up to $19? I hope that was no one in our chat.
I wish I would have taken it though.
$19? Did this print over $19?
Yeah, it did for a second there.
1906?
The algos were loving that. Raise the guidance.
That is, oh boy. But anyways, that's just, just want to.
So what are your levels, Joel, before you get on out of here for today? What should we be watching on downside?
This is what the bears need to do. Okay. And I told the AMC people what they need to do. What the bears need to do to take firm control of this market is to get us down, take out 40.80, close under 40.80, make a new weekly low, and just like everyone will just turn the table on the entire week. It was a pretty, it was looking like a decent week. But now it's not. So that's what I think. On the upside, these kind of rip roaring rallies, it's hard to pick. I mean, I guess if it got anywhere near the low from yesterday, which was 41.36, that's about 25 handles away, man. You'd have to be. I think you'd have to be lined up there. But I'm going to hop over to PreMarket Prep Plus. I'm going to open it up here today so everyone can join in because we missed a lot of symbols. And Mitch and Triple D, I'll check in with you later on. That was a lot of fun today.
All right, let's get Joel on out of here. We're going to wrap on up. Dennis, it looks like they finally did that rug pull. Now it's going to be interesting to watch if we can find some balancing, some support down here. It's going to be fun now. Anything else that you should be watching out for today?
I think I'd sell rallies.
Sell rallies?
I'd sell rallies. You're going to get a rally. You're getting a little bit of one right now. There's so much FOMO out there. People are like, oh, this is the dip I needed. This is the dip I needed. But I think this is going to be the rug pull to those people who come in and buy this dip today. I think we're going to rally up. Maybe we get to like 412 SPY, and then they pull the rug again. And I wouldn't be surprised if it's the day we close on the lows.
We'll see what happens. Like always, give us a thumbs on up. Have a great weekend, Dennis. I'll let you get on out of here. And stay tuned, guys, because these guys are going to be having a great swing trading event. Don't miss it. I'll go ahead and I'll preview it a little bit. Swing trading with PreMarket Prep, of course. Check that on out August 18th. Don't miss it, guys. It's going to be 3 hours of fun entertainment. Also, learning, of course, education first. Like always, we got to always add some tools to that tool belt. So come on over. Hosted by Spencer Israel. I know you guys will enjoy that. Joel Elkanin, Dennis Dick, Rob Friesen. I think get on over there, guys. I love the way Rob trades. I love the way Dennis trades. And there's nothing like keeping it simple when Joel gives you those easy levels. So come on over if you want to learn that. Next up, we still got some live trading action. We've been absolutely killing it, man. I almost don't even want to jinx it, but Zunaid, Ryan, and I are absolutely destroying it right now. So if you want to have some fun, come on over to the live stream. Live trading stream is not only where we do some trading, but we also have some fun. If you guys ask the chat about it, there's a lot of you guys here that come and join us. So just ask them. Tell them what they think. I'll let you guys choose for yourself. Get on over, hit the thumbs on up before you get on out of here, and hit the subscribe bell if you're not already subscribed. Let's get on over to some live trading action.